Alright guys, so recording has started. So this morning, for a quick, very simple London session recap, all we really did this morning was mentioning the 2022 model right here. Good morning. I tagged all the VIP members, potential 2022 model after Asia high sweep. We had our market structure shift right here. The stone closing candle becomes our breaker block. We have this dashed line, the midnight level right here on this level as well, a inversion fair value gap. And yeah, essentially the Asia low target. That played out very nicely. If we take a look at it now on the S&P 500, very clean market structure shift, retest of our breaker block right here. Never closed back above the midnight level. That was also very nice confluence. Or well, not confluence, but you know what I mean. Would have been a little bit, yeah, I don't know. I would have worried a little bit more if we would have actually seen the close above and the push above the breaker block, but it all played out very nice. I think I closed right here at the VWAP because this setup actually happened prior to the London Open. So I was a little bit, yeah, let's call it scared, be honest, that we are just going to, bounce off the VWAP and continue to make new higher highs right at the London Open. I usually don't like entering trades prior to a significant market that's opening up, like the New York Open or the London Open. Eventually, it still played out nicely, retested the 1 hour inversion fair value gap at this point in time, and continued lower to hit the target of a simple 2-to-1 sell side liquidity target. If we would have let it run to the Asia session now, that would have actually been a 3.29 risk to reward. It even hit the low of the day right here. We open up with this little new day opening gap, filled it in and continued to push. But we didn't make it below into the sell side liquidity. That's essentially where we turn around right with the next 4 hour candle opening at 6 a.m. New York local time. So that's when the algo essentially shifted gears from sell side, lower lows, lower highs, to higher highs and higher lows. Just to explain that. So that worked out very nice to our target. Afterwards, I really considered myself done for the London session. And now the interesting question is, what are we working with right now? So therefore, I simply get rid of all that analysis. It's not going to be helpful anymore. We have the ICT all-in-one indicator loaded up for the 1 hour time frame candles right here. And now the other important thing is for me to have NASDAQ open as well in Q to quickly flip between both charts. So right here we cleared the Asia session high. Oh, interesting. Very, very interesting, because I think you guys already see that or see it on your own screens as well. NQ right now at the high of the day, while ES is still below the 830 high. So that's major SMT divergence, if you know what I mean. So this is our London session high, our pre-New York AM session high right here at 830. Not sure if we had news today. Didn't check the calendar. Didn't have the time to. But main point is that we've been forming lower highs here on ES, while we've consistently, after the London session high right here, formed higher highs on NQ. Let's see, we also swept this low on ES. So right here we formed a lower low, and on NQ we did not manage to take out this low. We left behind relative equal lows essentially. So that's just my first impression after looking at the charts for the first time since the London session, trying to come up with a plan of action essentially. That's what I would like to call it. Plan of action. See what I think is likely gonna happen next. And if I spot a nice setup. I did the exact same thing earlier this morning when I woke up essentially. I looked at both charts. I saw Asia trending. Okay, I think that was right around this time. We cleared the Asia session high. And I compared both ES and NQ. consider that we could get a potential retracement after sweeping the high and immediately rejecting from that level as well. And yeah, then I checked both charts, compared them. Well, looking at ES, it just looked like the much cleaner setup. 2022 model right here, higher high, higher low, higher high. Market structure shift, nicely lined up with the midnight level. And if I simply compare ES, the setup right here in terms of market structure, retest, midnight level, continuation lower, much cleaner than what we've seen here on NQ. That's why I decided to trade NQ at this point. We formed a higher high, really failed to really close below the market structure shift level all the way until here. It also chopped around for much longer. But essentially that's just feeling based and based on the chart, whatever I think looks better, and that's the one I shared. All right, but let's get to the main part. What's happening now? So where are we coming from? Let me hide the ICT all-in-one indicator quickly. On the 4-hour time frame on ES, we cleared buy-side liquidity. Buy-side liquidity taken, 12, that's fine. We're inside a pretty big 4-hour bearish fair value gap, just to put everything into perspective. For our what font size is that? That's 11. Let's make that 11 too. That's just my OCD going off. All right, for our blah blah, let's have another 4-hour fair value gap right here. Get rid of all that. And of course, if you have any questions, feel free to ask, like always. For our fair value gap, just marking them out so I don't have to do it later in case we gonna see a interesting move. Another 4-hour fair value gap right here, and we already used that fair value gap to push up higher on Monday. So we open up this week. Where did we open up? Monday, Friday, 6, 10, 14, 18. So this is where we open up. New week. Let's make this a thick line. No, that looks weird. Yeah, like that, that's better. And also draw in our new week opening gap. I do this manually on the 4-hour time frame. Of course, I could also just simply use the ICT all-in-one indicator and plot off 4-hour fair value gaps if I would want to. But I like doing it manually because that usually gives me a feeling of where we're currently at. So fair value gap, let's get rid of the middle line and make this, yeah, not sure about you, but well, 11. So we have our new week opening gap, we have our 4-hour fair value gaps below, and essentially what we started doing this week, if we look at market structure, just at the 4-hour time frame, we have our previous week slowdown here. We pulled back, but instead of actually pulling back and continuing lower, we formed our first higher low, higher high, higher low, higher high. Question is, are we going to simply get a new retracement and continue to push further into this 4-hour bearish fair value gap? That's the question right now. Just looking at market structure, right now we're in bullish market structure. We hit the major buy side target between those two lows. Right now we're at the 62% retracement level, and that's the PD array I'm currently looking at. Not looking at this one specifically, because on the 4-hour time frame overall, over the last couple of weeks, or basically ever since April, ever since Q2 of 2024 started, We had this major SMT divergence right at the high, at the all-time high essentially, between ES and NQ. We took out buy side, gapped above, shifted market structure, and ever since we, well, used bearish for our fair value gaps to deliver price lower. So the question now is, we're actually seeing those higher highs and higher lows now for the first time in April. And that's really interesting if you ask me. Because all we did right here, if we look at it, we pushed higher and then we just consolidated. You can't really call this higher high, higher low. There's not real any proper movement. You could call this a low, high, higher low, higher high, but I don't know. It doesn't compare. If we measure the time that happened within 11 bars, and so far this entire move to the upside already took 20 bars, and I don't know, just based on market structure, that's what we would expect looking at ES here. Understanding that we just hit buy side liquidity and a 4-hour bearish fair value gap, the two scenarios that I see possible on the 4-hour time frame is either us continuing higher, shifting market structure, and then continuing back lower. That's a bearish scenario. Another scenario would be that we know after taking buy side liquidity, we reject, fill in, maybe just the highest bullish fair value gap, or maybe even this one right here, retesting the 4-hour mitigation block. The down closing candles should be used as support on the 4-hour time frame, and then we continue to push higher into this, maybe even above it, and we shift market structure overall, even on the 4-hour time frame. But if we merge this analysis with the daily time frame, look what we found here. A daily bearish fair value gap. Well, let me finish my ES analysis first. They usually go hand in hand, just with slight differences. So we're inside a daily inversion fair value gap, a daily bearish fair value gap, and all of that is somewhere ending inside this 4-hour. You can see that inversion fair value gap from the daily lines up with the consequent encouragement of the 4-hour bearish. Here we have our daily bearish. Let's forget about the inversion fair value gap. Let's keep it simple and put it up like this. So this is our daily bearish. Let's actually give it a border. %. Make the border red, because it's a daily fair value gap. Let's put it in here. Daily 11. So it's very interesting. We could expect price to deliver lower from here. In my opinion. Let's check the chat here quickly. So 4-hour time frame analysis. Let's drop it down to the 1-hour time frame here quickly. And put all these new drawings into a folder. One-hour time frame. We took out the buy side liquidity. We have our daily bearish and our 4-hour bearish. We also have a 1-hour fair value gap perfectly aligned. So you can just see how much overlapping confluence we have here. We have a 1-hour bearish. We have a daily bearish. We have the beginning of a 4-hour bearish fair value gap there. We have a daily inversion fair value gap there. So it's going to be a high resistance area where you would look for that textbook short setup. It's interesting, not gonna lie. So let's turn on our ICT all-in-one tool again. We had Monday, Tuesday, and so far also Wednesday pushing to the upside. Let's take a look at the 5-minute time frame now. daily for our just gonna quickly hide this to keep it clean. We know what's going on up here now. We don't need it on our charts. Just one quick reminder. Daily bearish, 4 hour bearish, daily inversion fair value gap, 1 hour bearish fair value gap, blah blah blah. Lots of stuff happening up there. Right now, just to see if we can take out the London session high. Right here, I would be looking at this hourly bearish fair value gap. This one right here, and see if we can get a close above it for on the hourly time frame, because the let me see, down closing candle should be somewhere in here. Because in 7 minutes we get an hourly close, and that's going to be interesting. If we manage to close above this fair value gap on the hourly, I really think, well, if we haven't hit this buy side at that time already, that we can push up higher. We now also have textbook equal highs sitting here on ES. Damn, just below the midnight level. There we go. Yeah, until 12 that should be fine. Equal high buy side. High of day. Top right. Like always, if you have any questions, feel free to ask. I'm gonna get over to NQ shortly once ES is finished. Doesn't look like something I want to be involved in right now. If I just compare the quality of a setup right now, here we would be guessing. And don't lie, I mean, it's totally guessing if it's going to continue up higher or lower. Right here, we just had so much confluence with the market structure shift. Breaker block, midnight level retest, continuation lower. Here's our breaker block, our midnight level. We swept the Asia session high just before. I mean, that's just, yeah, it's hard to find a better setup actually. The only thing I didn't like about it is that it happened prior to the London Open, well, which led me to close out one position early at a 1-to-1 risk to reward. The other one I let it run into the 2-to-1. The quality of the setup here, how clean it is. Also, given the market structure, you just can't compare it to, well, 9:30 opening and then all this job right here. Yeah, nah, yuck. And keep in mind, we're also, at least on ES, still within our London session range. We have our Asia session range right here, and if I were to go into the ICT all-in-one indicator and turn on the London kill zone, just give it a couple of seconds to load, we can see that we're, well, starting at 2 a.m. and ending at 5 a.m. But I would consider this entire range here from the high to the low our London session range. Let me get rid of the blue box again, I don't like it. So I usually have it turned off. But you get the idea. So high of day, low of day, we're still within that range. Now let's take a look at NQ. NQ is interesting because it presents the SMT divergence. Let's see, we cleared. Go to the daily here real quick. Get rid of all that stuff. Doesn't make a difference. We get those two lows anyway, if I'm correct. Yeah. So we took sell side liquidity. If we look at this move to the upside, We had our dipper. We took sell side liquidity. We already closed above our first daily bearish fair value gap and also above the first and the second daily bearish fair value gap right here. Interesting point is, just let me keep an eye on it. Don't want to miss a potential short on NQ, so let's see. Cardio, what's your plan? Short before 10 a.m. or you think this is still or just manipulation? I mean, we have the SMT divergence, great indication. Let me check the 1 minute time frame. Higher low, higher high, market structure shift, retest of breaker block, and quick acceleration lower. This being the breaker block, paired with the SMT divergence. We cleared the high here this morning. NQ pushed above the high, leaving behind the SMT. 9:30 opens up, pushes, retests the VWAP. So everyone telling me the VWAP's not an interesting area. Well, you do you. But right here we close below a bullish fair value gap. Bounce perfectly off the VWAP. Push back above the midnight. Take out our first buy side liquidity. High of the day back at this point in time. Right here, push above it. Keep on forming higher highs and higher lows. Right here we broke it for the first time. We come back to retest our most recent higher low and we recheck from here. And we already hit sell side liquidity. So yeah. Now I don't know. Let's see. Relative equal lows. I will wait until 10. That's just 38 seconds. And see if anything presents itself. I'm not sure, I wouldn't really trust. Let's see how the 4-hour candle is going to close. Let's hide the ICT all in one here quickly. We have a 4-hour bearish fair value gap just above us. We haven't hit that yet on NQ. Fair value gap. 4-hour. Okay, new 4-hour candle opened up. We didn't close above our previous down closing 4-hour candle. We took out some 4-hour highs. Right here and right here. We open up with the new day opening gap. We have plenty of 4-hour fair value gaps below us, like we analyzed it on ES just earlier. But if we put it into comparison, ES already cleared this buy side liquidity right here. So ES is already starting to play inside this 4-hour bearish fair value gap, just to put it into perspective where they currently are sitting at. So yes, we have SMT divergence between ES and NQ intra session. So ES didn't clear the London session high just yet, and NQ did. But at the same time, on the bigger time frame, we have bearish SMT divergence as well, but this time NQ is the weaker one and not the stronger one, if that makes sense. Because, like I said, ES is currently spending time above this high, or at least it cleared that. Let me go back to the 4-hour time frame and show you. So while NQ is essentially playing inside this fair value gap right here, is it? Yeah, this fair value gap. Hasn't even touched that fair value gap yet. This one right here, yes, is already well above that. It's tricky. So let's see. We took buy side. We have our 4-hour. Let's take a look at the 1-hour. 1 hour buy side liquidity. And just look at that. Let's go to the 5-minute time frame and zoom in here. We haven't cleared that 1 hour buy side. If I'm not, nope, we haven't cleared it. So this high is still up for grabs. And we also haven't hit the 4 hour bearish. Doesn't mean we have to essentially hit it. Could also just revert from here, but just something to keep in mind. This could just be a very large swing point, essentially. We have our low of the day right here. Let's take a look at the 15-minute time frame. Just based on the 15-minute time frame, I wouldn't go short on NQ just yet. What happened right here? Okay, we didn't take out sell side liquidity here. We have bullish SMT between ES and NQ, but we have a inversion fair value gap plus bullish fair value gap right here on NQ, and we just tested it. And we rejected from it. The question is, are we going to continue higher from here? Well, to be honest, I don't know. We closed below our first bullish fair value gap here on NQ. We have the SMT divergence. 1 minute time frame, we filled in our fair value gaps, inversion fair value gaps as well. I think it's a good chance to take a short here, SilverBullet short, continuation into all the sell side we pointed out here. Like all trades are. But yeah, don't be surprised or mad if it doesn't play out. Taking a chance. And if you're a good risk manager, that shouldn't be an issue if you lose one trade. It's part of it. But for me right now, it doesn't feel right. Also that I have to be on 1 minute time frame to see something interesting doesn't feel right either. I don't really like that. So just to focus on the 5-minute time frame, I prefer doing that. We have our 5-minute SMT divergence, or essentially on any time frame, because NQ formed that higher high. We have sell side below our low of day. Turn on our ICT all-in-one. We're just flirting with the VWAP again and the midnight level. We have a 5-minute bearish fair value gap here. So I'm going to use this fair value gap as invalidation. If we manage to close back above this bearish fair value gap here on NQ. After, let's see if the setup looks a little bit better on ES. Kind of, because we have perfect equal high buy side. Let's review them both. We still have 4 minutes before we get the 5-minute candle close. We're in no rush at all. Unless, of course, we pump massively now. So we have the bearish fair value gap. We know where we're coming from. A bullish fair value gap right here. We have nice buy side above, a 4-hour bearish fair value gap. We're bouncing off the VWAP and the midnight opening level. Just stacking the confluences. We have one more bullish fair value gap below, but we haven't tested it yet. So right here. Look at this push. We seem to be getting the same push on ES. So essentially I'm looking forward for it to become an inversion fair value gap. Market enter on the close of this candle with my stop loss below the low right here. Question is where I'm going to take the entry on. I like the fact that ES did not clear the high of the day, but we will see, like I said, how it plays out. Not really. We have the midnight level above us with equal high buy side, and VWAP is right in the middle of it. Nah, I think I prefer NQ in that scenario, because we have the VWAP and midnight level below, and they nice for our inefficiency that we could target. We have our inversion fair value gap right here. Buy side, 1 hour buy side. That looks nice. What do you guys think? Give me feedback. Let's take a look at the 15. Yeah, looking good. 1 minute time frame. Higher high, higher low. Essentially just getting rid of longs. See how long it played around here? Just love to take all this volume. Trap traders at the high of the day out with a very quick stop run. Take out the low. Push back above the midnight level. VWAP, hold support. Let's see if we get to close above the 5 minute. We have 1.5 minutes left here. This is also pushing back up. In terms of risk to reward, it doesn't look very attractive. But let's see. First of all, we have to answer the question which account we're going to take it on. We have trading account number 3, 51318. And let's just go with this one. Stop loss like this should be fine. At the consequent encouragement of this candle, we are going to risk 500. And my TP is going to be just somewhere up here for now. Make sure we also get the close above. 20 seconds to go, and also on ES preferably. We're executing on NQ right now. Alright, we're in. We have our inversion fair value gap now. We have our take profit target set at a simple 1-to-1. Done. Confirm. Let's move over to the S&P. Also with a very strong close above. This was the short earlier. Let's go to the second account now. And see if we can take the long here on the S&P. See what the risk reward looks like. Into the high of the day if we catch the inversion fair value gap entry. Let's put our entry a little bit up higher. This should be fine. Take profit target at the high. Good. So let's see how it works out. We have our inversion fair value gap. We want to see support from here now. We have our inversion fair value gap on ES. We could add to the position on... Now we're already in with Good portion here. Entry could have been better, of course. Let's see, we're on NDX here. Yes, we entered right at the high essentially. Let's see if we get stopped out immediately or if it's actually going to hold up. Stop loss on NQ is right down here at the 50% of this wick. Yes, right at the VWAP. Check out the 1 minute. Essentially, we need for NQ for the setup to play out essentially those two 1 minute fair value gaps to end up holding support. Just by seeing that, I'm going to move my stop loss. Let's go to the 1 minute time frame here as well. Below the short term low. If we immediately close below this 5 minute inversion fair value gap, I'm going to exit the position. "54 seconds to go." Yeah, we lost momentum up here. We pushed, but then we only wicked around here. We didn't fill our highest 1 minute volume imbalance. Higher high, market structure shift. Okay, there we go. We're likely gonna get stopped out on both. Close that one manually. Let's quickly head over to ES. Okay. Also, that was stop loss. Well. All right. Got faked out here. Let's go to the 5 minute time frame. No, overall, not the worst setup. Worth the risk. Equal high buy side, high of day, coming off a 5 minute bullish, inverting a bearish fair value gap, closing strongly above it. Unfortunately, turned out to not be respected. I don't know if we would, for now at least, continue to expect seek and destroy choppy conditions. Looks pretty choppy to me right now at least. Not respecting fair value gaps. We'll see if we find another great setup. Otherwise, I'm just going to leave it at that. Overall, with today, should still be in profit. Are we? Yeah, should be. Doesn't matter. And the X. Let's take a look at Euro, US dollar, and gold. Nah. If we now push back up, I would honestly be very hesitant to take on another trade just because of the range we're currently in. It's not worth it to me. I tried it once, but I won't try exactly the same setup within the same choppy range again. That's just one of my rules. That doesn't make sense to me, hence I won't be doing it. If anything, the short would be more interesting to me. Now I want to see it collapse into the low of the day. Same thing for NQ essentially. Now that we are back below the VWAP and the midnight level, I want to see the lowest bearish value gap get respected, and we continue lower from here into our low of the day after failing to continue higher. But wouldn't just sign off on it yet. Doesn't offer any great opportunities, at least with my analysis though. Are there any questions or are there any trades that you would like to share that you have already taken? Feel free, just put the chart or the link to the chart into the chat. We take a look at it together if you want to. If not, I just look at it myself. Feel free to share and engage a little bit on the live stream. Otherwise, don't. What's the time? It's 4:19, almost 10:30. No questions right now, so I'm just gonna leave it at that. I'm gonna be gone for a couple of minutes. I check the chart on my phone. If anything major should happen, I will come back. I will quickly make myself a cup of coffee. Gonna be back in no time. And well, to make it simple, if we close below this bullish fair value gap, we could look for the inversion fair value gap into the low of the day. Tough thing is stop loss placement. That would be really tough. You could put it above this wick high, but since we've been choppy and rangy so far, it's dangerous not to expect it to continue in that exact way. Same thing for NQ, 2 5-minute bullish fair value gaps. If we close below that, we might leave that range and take out some more sell side. If not, we are just going to keep on chopping right around the VWAP and the midnight level. And that's not worth any risk to me. So I'm going to be back by the end of this candle close. All right, we're back and we're still in that same old range. RM, memory of tree, lemon, Kirk, cardio, anything you want to add? Choppy, choppy. I agree. Choppy, choppy. I think we had a pretty good chance of this inversion fair value gap actually playing out, given equal high, SMT divergence, bullish fair value gap below, now a new inversion fair value gap, especially on NQ with the hourly buy side above and the 4-hour bearish fair value gap. I still think we're gonna get into that eventually. Might not be today, might be tomorrow or Friday. But overall, well, this is just bad luck, and not bad luck, but it happens. That's why we manage our risk, and we don't risk 5% of our margin just on this single trade. We took a bet with 0.5%. 1% actually on one account, $500, and on the other account we risked 0.75, something around 380. That's just, yeah, normal, happens. Tomorrow news, that's why the market looks like this. Yeah, well, there's always news tomorrow, if you know what I mean. And I don't like to blame tomorrow's news on today's price action. Tomorrow is tomorrow, today is today, yesterday is yesterday, if you know what I mean. Because you could always argue, oh yeah, today's price action looks that way because of news tomorrow or news in 2 days. But it's bullshit, if you ask me. Sometimes PA is just trash and it likes to chop around. And that's it. There could be 100 different reasons why PA is chopping around, depending in which, yeah, what narrative you use to look at the marketplace, essentially. Some people would argue, oh yeah, PA is choppy because RSI is sitting at the 50 level. And other people wouldn't agree with that. Some people would say, yeah, we're right between supply and demand. And some people wouldn't agree with it. Some people would blame it on the news event and say that smart money or the algorithm is accumulating, blah, 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 we're at the high of the week. And some other people wouldn't agree with it. Doesn't matter what you use to explain price action at this point in time. Yeah, as long as it makes sense to you, that's fair. But I wouldn't short this, at least not until we shifted structure on the 15-minute time frame here on NQ. Just given on higher highs and higher lows, bullish market structure, I'm not a big fan of shorting into that. So with the first trade, we tried to go with the flow. Looks like we're breaking now, 10:30. This candle is going to close in 4 minutes. Looks like we're gonna get a close below our bullish value gap here. Pretty much get rid of this one since it hasn't been respected at all. We cleared sell side liquidity. We have more SMT divergence. Once again, we see that ES dig deeper below this low and also below this low. But essentially what is very interesting, at least here on NQ, we haven't seen a single candle close below the previous day's high. We gapped up this morning, right here, our gap. And if we zoom in, you can see right here, this orange line, we never closed below it. Somewhere over here, yeah, never closed below it. We've been holding above the previous day's high for the entire day so far. Interesting, just an observation. It's pretty rare usually. Most of the time we spend majority of the day inside the range. Right here, this is our daily range. If we look at the previous day, even here, we opened up inside the range, massively dropped below the range because of, I think, the Iran attack. I don't know, something overnight happened. We retraced completely. We took that long actually, and retraced back into the range and rejected. Previous day's low, previous day's high. Here we spent the entire day within the range. On Tuesday we spent until 9:30, until market open, essentially in the range, until we expanded. Now we're above the range. We have this 1 hour buy side sitting here, and then write something else inside the 4. Yeah, nah, I don't know, it's not simple. And it usually is like that if we're choppy. The best thing, in my opinion, we all could be doing right now is hit that X button and come back tomorrow. Done. Let me actually take a look at Forex Factory. Yesterday we had PMI news. Tomorrow we have cardio. If that's your argument why price action is choppy right now, some GDP news, unemployment claims, or pending home sales. If tomorrow would be a FOMC news event or NFP news event, I would say okay, might be the reason why we're chopping right now, but we have unemployment red folder news every week on Thursday, except if there's a bank holiday. Pending home sales, of course, gonna see a little bit of an impact there, but it's nothing like NFP or FOMC. Advanced GDP, interesting, but it's not Thursday, no, it's Wednesday, yeah. Of course, interesting, but yeah, people don't usually not scared about those news events. Not scared might be the wrong word, but careful. Usually you're careful with NFP and FOMC news event, and not so much with, what's it called, GDP news events. We're still sitting in here in Q, holding our 2 5-minute bullish fair value gaps. We're still inside a 15-minute bullish fair value gap. We get our 15-minute candle close in 5 minutes. So if anything, I would be interested to see if we can close below the 15-minute bullish here on NQ. I would prefer to short NQ as well. Why would I prefer to short NQ? Reason number one would be the bearish SMT divergence. Reason number 2, we still have a couple of points to go below this bullish value gap here, 40 points or something like that, to dip inside of our new day opening gap. So that's much more interesting to me than taking a short right here below the new day opening gap, 1.5 points away from our low of the day. Of course, we have more sell side to target here, but in general, I would be much more interested to short something that doesn't have equal highs above, that took out the high of the day buy side liquidity. Hope all that makes sense. Like always, if you want to, feel free to ask questions. Let me circle in the 15-minute fair value gap. You took a short, nice. I didn't see you mentioning. You're in a short but no confidence. Feel free to share your entry and your reasoning why you took a short and where you took it from. I mean, this was just, yeah, well, took a little while until it eventually continued lower. Right here, bearish fair value gap, inversion fair value gap. No, not gonna deal with the 1 minute time frame. Promise that to myself. So we cleared the low of the day. Didn't retest our inversion fair value gap here. M formed in ES. Let me take a look. At 10:10. Yeah. So you entered short right here. Nice. Yeah, Viva retest entry. We still didn't clear that sell side liquidity here. Good chances. You're trading that on a futures funded account, futures account, or CFD account on a 1 minute time frame. Kind of struggled to stream, do my analysis. Yeah, on futures it's a little bit simpler to, if you already do your analysis here, to also, yeah, just put a limit order there on the VWAP, wait for it to get filled, and then drag your TP and stop loss around. You also don't have spreads on futures accounts, or maybe just one tick spreads. So yeah, I think it's a little bit easier to do with futures compared to CFDs. So let's see, we have 1 minute left. Where we get close below. Question is, where would I place my stop loss? So let's head over to NDX. Risk. Right here. Sell. Going for the gap fill. But we want to make sure that we actually get to close below. Now we closed right inside of it. Do you see that? If we go to the 15, closed right inside the fair value gap. Not good enough for me for my second trade. Yes, looks like it's really cutting through the low of the day with a new bearish fair value gap. That's what we would like to see. No rejection wick. That's looking actually very good for the continuation. So the only reason why we would be interested to short here is because we see ES has already done that move. But yeah, no, I really wanted to see the 15-minute close below. Seeing it holding support here, where we've already been super choppy, and after already taking one losing trade within that range, I want to make sure that I have sufficient confirmation that we left the range, if that makes sense. And close right on it. I know we closed below this 5-minute bullish here, but we have another 5-minute bullish just below. I just put more weight on the 15-minute fair value gap. Let's see if that was a good decision to make. We'll see. Point out sell side liquidity on ES. just around our yesterday's volume point of control, which is also very interesting. Low of the day, volume point of control from yesterday. Mm-mm-mm. Mm-mm-mm. Well, still not really interesting, to be honest. The only thing that we respected at the moment is our 5-minute inversion fair value gap. So we closed below, we came back to retest it, and we didn't violate it by closing back above. But still, yeah, this essentially is what you would consider a bullish market structure shift. See that? Lower low, lower high, lower low, new higher high. This would be our breaker block, so we would expect prices to continue higher from here, but this could also just be a fake out on the 1-minute time frame. Like I said, I would really like to see a sign of weakness on NQ before I short again inside that range. Entered a experimental trade here, looking essentially looking forward to see this high not being violated today anymore. Looking for the retracement on NQ here as well. Just looks like a nice top formation, especially with the SMT. Gonna give it a try. Also given the weakness here on the S. Looking forward for the S essentially to take out the sell side liquidity right here. Thought someone was putting in a message. So no scalp. If I see a nice setup, of course I will alert it. It'd be nice to see the close below this bullish share value gap now. We just took little bits of sell side right here. Took out those two relative equal lows. You took the short right from the inversion fair value gap. So that first inversion fair value gap, now which one? Hang on. Yes. Right from the inversion fair value gap. Ah, okay, I see which one you but why don't I have that on my chart? Yeah, okay, you're using that one. Now I know where it's coming from. Right? No, doesn't look right. 5-minute futures. Let me zoom in here. That's the 1 hour bearish fair value gap, yeah. Then we have the volume point of control somewhere over here. And then you used this bearish fair value gap, right? Yeah, exactly. We talked about it on stream. I don't think you've been around at that point in time, but we actually entered long of the inversion fair value gap here, looking for equal high buy side and high of day SMT divergence to be broken. We got stopped out once we went below this bullish candle. Essentially a good thing. Wherever we would have placed our stop loss, we would have gotten stopped out. And well, seeing a fair value gap, a bearish fair value gap, being disrespected, closing above, leaving behind the inversion, and then immediately followed by a bearish engulfment candle, closing back below it, well, sort of only invalidates the inversion fair value gap. Then we come back to retest that area and we reject from there. So you could argue that the old bearish fair value gap still played out essentially. But like we say so often, doesn't matter really, as long as it makes sense to you. That's all you need. Yeah, retest. Boom. Bearish order flow confirmation. You're not wrong. That's for sure. That's where our M took his VWAP short, right here. VWAP retest, consolidation, then we broke lower. You essentially had the exact same entry like our M had, but from a different, yeah, with different confirmation, or yeah, same entry, different thoughts. So we also close below this 5-minute bullish, flip it to an inversion. Volume point of control right here at this nice low from yesterday. I think once we break, we can really drop here on NQ at least. If we do. What do you think about that, Bongo? You're the volume profile expert. I'm just using it every now and then. I think it makes sense. You got wrecked yesterday trying to short. Yeah, this yesterday wouldn't have been day to short. How badly? Manageable? Or just trying to, I don't know, what's a fair way to say that? To like, yeah, show the market your power. Yeah, it's gonna go short. It's gonna go short. No, it's gonna go short. No, not this time. I know what it's like, but more than anyone probably. Yeah, I know what it's like on losing days, especially because you want to make back what you've lost. It's, yeah, something that a well-seasoned risk manager who has gone through those numberless days of over leveraging or over risking essentially when in drawdown, not in drawdown, but yeah, when he gave away his profits, to not do it again anymore. I know exactly what it's like, but you just gotta get past that essentially. It's the only thing you can really do. Forcing yourself to stop after a given amount of dollars lost, and forcing yourself to always use the same risk. Maybe cut it in half, but never double it or triple it just because, yeah, of what's going on right now. Shorts playing out, already in profit. Let's drag my stop loss to this high. Essentially looking forward to see a quick sell-off here on NQ with the new hourly candle. Paired with the SMT divergence at the high. Yeah, it's that damn consistency. Let's see, SMT divergence, that's our buy side liquidity being taken. Major buy side. And what I like to do sometimes, if I have high conviction, and on a previous day we literally ran a lot and we could potentially, yeah, take out all these lows like we are doing right now here on ES. And I see NQ is essentially lacking behind. Then I sometimes like to take on those what I call high probability trades with my stop so far away and a low risk final confirmation entry. So essentially that's what the trade looked like if we look at. So I'm only taking those trades if I'm fairly confident. Now, if I have high conviction that we have seen the high of the day, and I don't take those trades right up here because up here it's still super speculative if that's actually the high of the day. But down here, after inverting all these fair value gaps, it's more likely, especially given the SMT divergence between S and NQ, and after we've cleared major buy side liquidity. Right here, all these three highs, we've cleared that. We hit a daily bearish fair value gap, blah, blah, blah. And we still have a nice new day opening gap right here to fill in on NQ. I know my entry isn't the best entry, but I certainly know that my entry is that my TP has a high probability, a higher probability of being hit compared to my stop loss. I don't know, it's, yeah. If you say it out loud, it's like, yeah, every trade should be like that. And your life would be simple, wouldn't it? Weighting the odds, putting them on a, yeah, scale. Gonna take partials on the way. Like we said here on NQ, volume point of control. Yesterday's volume point of control right here at this low. Yes, is already at those levels. Yes, really sold off here. Leaving behind those equal highs and the bearish SMT divergence just didn't make it interesting to me to short anywhere from here. Unless you take it from here, like Bongo and RM did. That's a fair entry. Everyone has his own reasonings on why to enter short at a specific level. Reason for me to short again here, especially after being this choppy, wasn't strong enough for me personally. But if it has been for you, perfect, that's all right. But to catch the continuation entry somewhere down here, just around the low of the day, of course, we have targets to the downside, and from down here, when we close below all these fair value gaps, still a 15-point move. So yeah, that's just me being a little bit extra cautious, preferring to short the index that didn't take out this liquidity yet, or who has more room essentially to drop. We now just filled in the entire gap. Let's see if it wants to continue lower. We have our new day opening gap. We have yesterday's volume point of control as our first major target here, really. And all this sell side liquidity. What's below us on the 1 hour time frame? Nothing. We have a gap right here. Then we have a bunch of unfilled fair value gaps. And like we talked about it at the beginning of the stream, if I were to put all these quickly into a folder, hide, and turn on our analysis here on the 4 hour time frame, we have 4 hour time frame bearish SMT divergence between ES and NQ right here. We had a daily bearish fair value gap, the low of a 4 hour bearish fair value gap, the low of an hourly bearish fair value gap, a daily inversion fair value gap right here. Daily inversion fair value gap, this entire gap right here. So all that has been hit. High confluence or high probability that we are going to retrace into, well, we could look at the previous range. 50%, 61.8 golden ratio, fib retracement, more than likely. But we also spoke about higher highs and higher lows being formed. Once we see that change in state of delivery, we could actually look for continuation shorts. Until then, well, right here, especially given the 4 hour bearish SMT divergence, once again, if we look at NQ right here, let me hide all these drawings. Damn, those are lots of drawings. Looking at the 4 hour time frame on NQ, we see that NQ didn't take out the SPY side. Didn't even manage to get into this 4 hour bearish. Got close to it, but didn't make it there. It managed to take out some buy side right here, but didn't even manage to take out this 1 hour high. If we look at the 1 hour time frame and zoom in here, didn't hit it. So now essentially what I'm looking for on a 4-hour time frame is first of all to see a close below the new day opening gap. And from here, essentially a retracement in one of those two 4-hour bullish fair value gaps. And essentially what I put my money on right here is that the probability of us, because I entered the trade somewhere at this level with my stop loss above the 4-hour candle high, that, yeah, well, of course, could be the case that we chop around here and never actually retrace into those 4-hour bullish fair value gaps. But that's the bet I took on. With 1% risk, that's fine. On those challenges, I'm happy to risk that. I know some people bet money on, yeah, sports, but it's much easier to bet on something that has a trend and not a, well, you could consider it a somewhat random outcome, because sometimes you're betting lots of money on the clear favorite and yet the underdog wins. You know, like there's no certainty at all in that. With trading, well, if you just go with the trend, you really should be fine. If you look at it, yes, it has a clear trend. The trend after the 2nd of April has been bearish. If you're scalping on a lower time frame, of course you can make profits with longs, but you have to be aware of what environment you're in right now on the higher time frame. If all you do is wait for a 4-hour market structure shift and plot your fib retracements, so we measure from the high to the low, we say we always, so if you want to be conservative at the 50% level with our stop at 1 and our take profit target at 0.5, usually ends up being a 2-to-1 risk to reward ratio. It would have played out eventually. By that time, we didn't really make it to our TP. So we got filled right here. This would have been a trade. We would do the exact same thing within this range. We form a new lower high, a new lower low, take another shot at the 50%. The only time we lose is if we're choppy or if we're actually reversing with the trend. Set our TP at 0.5. We form a lower low, lower high, so this would be our range. From higher low to new lowest low. We consolidate here at the low. We pull back to our 50% level. Place our stop at the high. Target 0.5. Before we hit the target, we see that narrative. Before we hit our main target with the trade we've taken before, we already formed a new lower high and a new lower low. And once again, all we do is set our limit order at the 50%. Stop loss at the high. Target 0.5. And like that, we would have made 2, 4, 6, 8% by risking 1%. Pretty simple, I know, too simple, and it doesn't always play out like that. That's beauty of hindsight. But, well, that's just goes to show why it's much easier to bet on something with a trend over something which, well, is more random than not. I don't know if any of you guys like betting money outside of trading. I don't really like it. It's pure luck in my opinion. Of course, maybe there's some skill to it, but nah. In my opinion, it's just 10 times easier to bet on something that has a trend or a direction. In an uptrend, well, most of the time going long, if that uptrend continues, you're good. Doesn't matter. As long as you don't, place too small stops, but I hope you get the idea. Right, let's take a look at NQ. 4-hour time frame, let's take a look at it on the 1-hour time frame. Can take a look actually at this entire weekly volume profile. So we opened up on Monday, coming from the high of the week. That looks pretty damn good if you ask me. Bongo, what do you think? I think I should 8 more. Put it all on this trade. All in one. No, just kidding. Yeah, could be a potential high off week with the SMT divergence. I'm not, well, just looking at the volume profile, my area of interest would be this inefficiency right here, because we can see volume has been pretty evenly put in within this box right here, right up here at the potential high of the week as well. Right down here, we've put in lots of volume if we look at it. But right here, barely. We don't even have those blue tops. And that's right if we look at our weekly range. Right now, so far, this is our weekly range. Right around the 50% level. And also want to know another funny thing, that 50% level perfectly correlates with this lowest 4-hour bullish fair value gap, and would also correlate, kind of turning into a swing trader today. But if the market's presenting an opportunity, I'm happy to take it. That's essentially our breaker block. Because if we look at market structure before that on the 4-hour time frame, our 4-hour breaker block, I mean, because up until this point, we formed a lower low, lower high, lower low, lower high, lower low. Right here, we formed our first higher low. So this is your first break in structure, but market structure hasn't been shifted until we break this high. Till we break the most recent lower high of our movement to the downside. Right here we have an internal break in structure, but market structure doesn't shift from bearish to bullish up until this point. This is your confirmation. I know, Bongo, and I'm actually very good at that, but it's also dangerous. You're very good at talking yourself into a trade. Damn. I think we all are, aren't we? But as long as you can keep up a nice win rate, there's really nothing wrong about it, I guess. Shut up, Bongo. I'm kidding. Now it makes sense. Mid of the week, high of the week, bearish SMT divergence. We took buy side liquidity. Volume point of control somewhere down here. I guess we just see where the journey takes us, man. Go with the flow. Volume point of control here at the high of the week. If we break it down to each and every successive day, right here, volume point of control number 1. Volume point of control down here inside that 4-hour. And looks like we're breaking. Basically, also looking at the 4-hour time frame, we've done fuck all today. Barely anything. All we did was range here a little bit. But we haven't had a nice expansion. So Matt's looking forward to catch that expansion potentially. All right, but that's going to be more or less a swing trade. Let's take a look at ES. Same thing with ES. Let's also take a look at ES, see if narrative lines, we can look at the weekly VWAP right here, around lower 4-hour bullish fair value gap. So we, I don't know, merge a lot of price action, volume into this analysis. We take a look at our entire weekly volume profile. Bearish SMT divergence, daily bearish fair value gap, 4-hour bearish fair value gap. So after taking internal buy side liquidity, instead of continuing higher, we do the retracement into inefficiencies left behind, like we did right here. So that's usually how price is moving around. Okay, we push up higher, we get our first higher high, we took out this high, but before we take out the next high on our move to the upside, what do? We come back to fill in a inefficiency, continue higher. After we took out this buy side liquidity, price still kept on going. Take out the next buy side liquidity, hit the daily bearish fair value gap. So after we hit that, do we expect this thing to continue up forever? If there is no major news event like the FOMC or NFP news event, no, we don't, because price always goes from buy side to inefficiencies if it is trending. After it filled in the inefficiency, we continue into buy side. Could stop right here, could stop right here, but very likely it's going to stop somewhere in here. And after it's done its next expansion to the upside, it's going to come back and fill in the inefficiencies. And that's what's happening right now. That's why price, if someone is drawing a trend, he's always drawing something like this and not something like this. That's how price is moving. We take out buy side, we come back to fill in some left behind inefficiencies. At least that's what we use as explanation if we look at price action from the ICT narrative. Other people who are just typical trend traders, they say price continued to go higher here because of the 50% Fibonacci level. Like I said, it really depends on your narrative, your edge. Doesn't matter what you use, but most of the time it's much easier to be friends with the trend. No, that's all right. So guys, are there any more questions? If there are, please ask me now. It's the end of the live stream. It's 5:25. This time I'm not taking a walk with my dog, unfortunately. Really sad, but might just take a walk by myself. So yeah, if there's anything you want to ask me, feel free. Otherwise, I'm going to end this live stream here. You guys know the trade I'm in. Going to definitely take partials at this low because of yesterday's volume point of control. Essentially what I would like to see now, let's take a look at the 15-minute as some closing thoughts. See resistance. That lowest stone closing candle. Essentially it's our breaker block. Higher high, higher low, higher high, lower low, break in structure. So this is essentially the 15-minute bearish breaker, maybe even on the 1 hour time frame. Looking for this lowest down closing candle. It's a big range, but you get the idea. Stop loss remains above this high. If we were to push back above it, well, I think I would likely get some invalidation before my stop loss is hit, so nothing really to worry about. Yes, filled in 50% here of this 4-hour fair value gap. It's 11:25. We like to usually turn around at the 30-minute mark. So I guess let's just see what happens. If we are going to bounce from here of this 4-hour bullish fair value gap, I think we're gonna get some more confirmation. At least enough confirmation for me to get out of my my short early on. Alright guys, thanks very much for tuning in today. I will be back tomorrow for a Thursday live stream and London session tape read. Until then, take care, enjoy the rest of your day, and spend some time outside. Bye.